All right, welcome everybody to episode number 49 of Collectible Live. Today is Thursday, October the 20th, 2022, and my name is Jeremy Lee. I do want to thank everybody who joined us last time with our guest, Karn Rai. We had a great episode. You can check that out and all the other episodes of Collectible Live on both the Collectible app YouTube channel and the Sports Cards Live YouTube channel. But let's get to today's episode. Let's bring out our guest. He is the CEO of Collectible, Ezra Levine. Welcome to Collectible Live. How are you doing on this fine Thursday, my friend?
I'm good. I think the last time I was on the show was in March. So I've got the benefit of sitting back and being a viewer of this show every week. It's always exciting when we can kind of curate the guests and bring real value to the community. But every once in a while, it's good for me to come on, check in with people. And today, my understanding is we're doing a little bit of a Q&A. Our team sourced some questions from our community. My understanding is that a bunch of them came in via DM. So excited to see what the questions are. I've really not seen too many of them yet. So I'm excited to dive in and excited for this to be pretty organic.
All right. Well, I'm looking forward to this too. I have that list of questions in front of me, as well as a couple that I sort of came up with myself. We will get to as many of these as we can. And I want to let everybody know who is watching. Feel free to post your questions and comments in the chat, but please understand that I can't even count the number of bullets I have here, about 20 questions teed up. So my guess is that if you have a question, it's already on this list. So we might save questions for the end. But Ezra, let's start off with, why don't you catch us up a little bit. From your perspective, from your vantage point, what is the state of fractional ownership within the hobby right now?
Yeah, look, I think it's still very young, very, very young, right? So today, fractional really still exists kind of in its own little separate ecosystem, right? You have to come to Collectible or another fractional ownership company to do it, right? And I think, that's not always going to be the case. I very much believe in fractional being integrated into a lot of larger marketplaces, into perhaps a lot of, larger wealth management platforms. We very much believe fractional is one of the major themes, I believe, that is going to be a massive trend in the collectible space for a very long time. I think we are very much early days, early innings. Obviously, it's not been without pain points. We see these pain points probably more than anyone does, and we feel these pain points, I can assure you, more than anyone does. And so our team works tirelessly. We've got a great team, a team full of collectors and investors, a team full of integrity, who is listening, and we see and we hear, and we work hard every day to produce the best product we can.
Yeah, I think that makes a lot of sense to me. And, you mentioned the word integrity just now. And while we were spending 15 minutes before we went live, and I went through a couple of questions that I had, and your response to me was, let's just have an authentic conversation, bring up anything you want. So I really, stand by or can really just endorse the integrity that you definitely do have. I want to say a quick hello we have Danny Black from Sports Ball. Danny, what's going on? Good to see you out there, and it was good seeing you at the Beckett Industry Summit. So the next question I have for you, Ezra, is how has fractional ownership in collectibles performed during these turbulent times? And by turbulent times, I think the asker of the question is referring to just the general economy.
Yeah, it's been very turbulent over the last, year, right? It really started probably back in October, was kind of the market top for a lot of these assets, not just in the collectible space, but, in the world at large. I would say, if you gave me the performance of fractional markets and you gave me the performance of the sports card market or any of these collectible markets, given where the world is, given the fact that, other alternative assets like cryptocurrencies are down, 60%. The fact that, British gilts, are down 60%, the fact that the stock market is down 30%, whatever it is. The fact that, our market, our collectible 25 index still remains up 12%, broader markets in collectible, I think they're down 20%. And there's obviously, some granularity to that numbers we can go into. But look, I think the card market and the collectible market for that is actually doing exceptionally well, right? We're obviously aware that there's still challenges and differences in liquidity profiles. So we can also talk about that if you'd like. But look, I think overall, given where the world is, given the turbulence, you see, real estate is down 30-something% on the year. You see the NASDAQ, right? The tech stocks are down 30-something%. So all these things considered, given mortgage rates at 7% and inflation where it is, I'm thrilled with where the market is. Obviously, we all like to see green on the screens, of course, but sometimes that's not the case. We've always believed that collectibles are a legitimate alternative asset class. I know a lot of people in this hobby, when they hear that, they shudder. It makes them very uncomfortable, and I understand that perspective as well. But at the end of the day, the numbers don't lie, right? These are as much, and not everything is a financial instrument. Not everything's an investment, of course. But there is a segment of the hobby that is. There's a segment of the collectible community that is. And so we firmly believe that, and we're building a market infrastructure and a regulatory environment to support that.
It all depends what your entry point was. We talk about turbulent times, but if you look at the graphs, the indices of the hobby from 2010 till today, you've got this nice little upswing. Then you've got this big blip, and then it continues to rise. Where we are today is still above where we were in early 2020. So we just experienced a big rise and then a fall in between. Danny Black has two questions. Is he the best looking guy in the hobby? No, you're not, Danny. Just look right over there. And then secondly, can Ezra discuss what it would take to get institutional investors? So I'll put that over to you, Ezra.
Yeah, well, I saw Danny last week in New York City. Always great to see Danny. I also saw him at the industry summit. So appreciate what Danny's doing for the hobby too. He's got a big presence. I also want to shout out to Danny. I saw he wrote a great article on the women in the hobby, right? There's a couple of amazing women who are really driving this industry forward, including our own Sarah Martin, who joined us recently. So great work to Danny. Institutional investors, right? That's something that we've been focused on a lot. Even back at the National, we hosted an event where we really bridged institutional investors with the hobby community. We brought a lot of them to a dinner at the National. It's something that, from our vantage point, they're very interested, right? They're very interested. And I think, you've seen the emergence of it in a very small scale. You've seen a bunch of funds that have invested, again, small dollars. But then, we see larger participants wanting to get into it. We did something back in August with JP Morgan, where we put our own special advisor, the former chairman of SEC, Jay Clayton, was on a panel, which was broadcast to the entire wealth management division of JP Morgan. We saw Goldman Sachs, right? Goldman Sachs, for the first time at their hedge fund and private equity dinner or seminar, they had an investing in collectibles seminar, right? So you're starting to see these things that tell you that, hey, look, big money is watching this space. I think the legitimate questions they have are, what's the conduit? What's the vehicle for them to get meaningful exposure? How big can the market get? And what the regulatory and the transparency of the industry is. And that goes really to what Collectible is building. I do believe a Fractional will be the vehicle where institutional capital can participate. And so that's a big opportunity, one that we see very clearly, and we probably have the best tentacles and the best vantage point of institutional capital participation in this category. So, to sum it up, I would say it's coming, right? And it's happened at a very small scale, but I do believe this is really just the start of this. And I think, again, when you look at the performance of these assets, obviously, you can segment the market in various different ways, but blue chips have done incredibly well, right? The things that are irreplaceable have done incredibly well. The things that are true investment grade, that are, scarce and low pop, have done incredibly well in this climate, right? So I think that gives a lot of credibility and credence to the market. And so I fully expect, over the next however long it takes, 2 to 3 years, I fully anticipate institutional involvement to be quite large in this category.
All right, let's go on to the next question. Can you speak to the volume of shares that are being traded on the collectible secondary market and any planned strategies to increase liquidity?
Yeah, great question here. Obviously, we're very acutely aware of the fact that liquidity is challenged, right? That is something that we track very closely. I mean, internally, what I can say is that secondary market transaction volume is up 300% year over year versus last year, right? So we are seeing more activity, obviously not nearly to the extent that we want it to be. But, I think some of the efforts that Collectible will be doing over the next, say, year or so, we're working on a couple of meaningful partnerships that I think could bring a lot of liquidity. We're working on being patched into various distribution networks, primarily with accredited investors that I think, could bring a lot of liquidity. So I would say, look, it's something that it's a problem, right? It's an issue right now. Obviously, it's hard to really kind of move large blocks of shares. It's hard to really move large liquidity in this market. And we're very much aware of it. It's very acutely tracked. And I think that will likely be solved through partnerships. It'll likely be solved through strategic relationships. And we're excited to roll those out when they come to fruition.
It seems to me like there's a big opportunity there, because I'm just aware of several assets on the platform that are trading at under recent comps for similar or the same items. And There's a podcast I listen to called the 615 Collector, and they spend time often in their podcast looking at some of these assets.
Yeah.
And I think there is some opportunity there. It seems like some people are seems like a lot of people just need to get comfortable with the platform or with the whole concept of fractional.
It's funny on that front. Our team, we've got a great data team here at Collectible. They actually ran some numbers, and again, this is not securities advice. I got my compliance guy sitting in the office next door. This is not securities advice, but based on recent comparables on our market today, it appears like there is 40 assets, right? 40 assets that are 50% or more below recent comparable sales on other marketplaces, other auction houses. So there's a wealth of opportunity. And I think, yeah, Jeremy, to your point, right? It is bridging that gap, right? It is getting people to understand fractional, to adopt fractional, and to really see the value and the opportunity there. Obviously, we've had a lot of buyout offers recently, some at material premiums to last trade on the secondary market. So I think this is very much part of the adoption curve, and we are working very hard to try to close some of those gaps.
Yeah, I think even though we see that the last trade value can be below a recent market comp on a same or similar item, the problem there, the challenge is still liquidity, because if somebody wants to go buy at that price, there may not be an option there may not be a sell offer out there, and then the vice versa works as well. Speaking of that, let's talk about the LeBron Carmelo dual logo man. That was a buyout offer was just received by Collectible, and the offer was for $600,000. This asset did IPO on the platform for $1.07 million. So should the offer be accepted, that's a significant loss for the shareholders. Do you expect it to sell? I mean, listen, you may not know because the vote is in progress right now, I believe. But do you expect it to sell? And if that comes in at a loss, what do you think some of the repercussions might be at that?
Yeah, okay, it's a great question. One, I don't know, right? I mean, so we have a process where when an offer comes in, we take a 48-hour pro rata shareholder survey. So that process is ongoing. We announced the results yesterday. So no personal opinion on if it's a good offer or a bad offer. What I will say is, the market was telling us, at least in our platform, was they thought it was materially lower, right? I mean, I think it was trading at 200 grand, 220 grand, in and around that ballpark, right? So this obviously represents a material premium to the price that people could have bought this at for the last couple of months. I think actually for the last year or so, right? So always interesting when, the wisdom of the crowds kind of votes what they think an asset is worth. Obviously, there is at least one buyer out there who believes it's worth a lot more. Our team, at the time, priced this asset even higher. Look, I mean, I think, it's tough, right? I mean, we obviously never want assets to go below IPO value, but that's also not realistic, right? You talk to a lot of dealers, and sometimes, you buy things and they're worth less, right? And you have to kind of live with that reality. Look across the public markets. I mean, there's a lot of assets that trade well below IPO price and never see IPO price again. Obviously, there's the contrary too. We've produced 27 exits with an average premium of 60% above IPO price, right? So some of this is just the whims of the market. Collectible doesn't control the market. We are not the market, right? We really are just the sort of financial infrastructure and the technology and the regulatory body, essentially, that kind of allows people to buy, sell, and trade these assets. And our hope is that the market ultimately will kind of realize what the fair market value is. So again, obviously, we want everything to go straight up, but this is a market. This is the financial market, and that's just not so realistic in that context.
That particular card, this LeBron Carmelo duel, if there was ever an incentive to get active on the Collectible platform in the secondary market, I mean, the last trade, as you said, was around, I don't know exactly, but $200,000 to $250,000 market cap. The offer came in at 600. The offer came in well in excess of what the recent trade was. I believe that's where the opportunity lies, and that's where people could really generate some profits by
And look, man, I think it's also important to realize, who's ever making this offer, I'm sure they're not doing it for charity, right? I'm sure they're not doing it because, out of the kindness of their own hearts. I'm sure they think that there's an opportunity there as well, that they can, make some margin, or that there's growth potential above where they're going to buy. I don't think anyone would go to buy something thinking they're pinning the exact top and they're never to see a profit from it. So obviously, this is a market. It's amazing that people can express their view. It's amazing that people have had opportunities to buy assets lower and hopefully realize a profit over time. But again, we want everything to go straight up. That's just not realistic. And, our job is to provide opportunities. And I think here there was and has been a big opportunity in the secondary market for the last year.
Okay, let's move along. The K1 issue, the tax reporting issue that you guys went through for the taxation year ended December 31st, 2021. Mm-hmm. My understanding was that it was a bit of a headache. People want to know, will K1s be needed moving forward, and how will the overall tax situation be improved?
Yeah, I mean, this was a headache. It really was a headache. There's no sugarcoating that. Our team was working as hard as they possibly could to produce these in as timely of a fashion as possible. I think without being in the fractional business, sometimes you don't fully appreciate, what fractional companies have to do to remain regulatory compliant. We are an SEC regulated organization. We are subject to securities laws here in the United States and soon securities laws all across the world. So there are things that we have to do. Again, so we worked as hard as we possibly could to produce these in a timely fashion. We did get it done, but it was certainly not without pain points, not to sugarcoat anything. We did recently take a shareholder vote, essentially, to convert these into little mini corporations, which would alleviate the K1 burden. That was approved almost unanimously by shareholders, which our team was happy to hear. So going forward, we will have to produce for assets. I want to make sure I get this correct. For assets that were offered and IPO'd and were funded before January 1st, 2022, there will be one additional round of K1s. That will be, I'm very confident we'll get those out on time. Hopefully have them out by February or March of 2023. So I do not expect a delay in producing these K1s, but there will be one additional round of K1s. Going forward, any asset that was offered and IPO'd after January 1st, 2022 does not have a K1 requirement, and any assets going forward will not have a K1 requirement. So, I chalk that up to a growing pain. Obviously, we do apologize to any of our members and investors who were affected by this, and I'm glad that we solved for it.
Good stuff. Always good to continuously improve and make things easier and less friction for everybody involved. All right, here's the next question that came in. It's a bit of a series of questions, so let me read these out to you. Will Collectible look to market undervalued assets for potential buyers, for potential buyouts? Would you consider once a year letting asset owners vote to send them to auction? And how can the gap close between recent comps and current secondary market prices? So a lot there. Let me just. Do you want to take it, or do you want me to reread the first one?
I think I got it. So yeah, I mean, I love this question, right? Because back to what we were saying earlier, there's 40 assets that according to our estimates, according to those of Card Ladder, and a lot of great data sources out there in the hobby, or recent comps at auction or other marketplaces, there's at least 40 assets that are roughly about 50% below last sale. By our calculation, there's about 184 assets that are below what we believe to be fair market intrinsic value for these assets. So clearly there's opportunities on the secondary market, and clearly there's opportunities for those valuation gaps to close. Without saying more, we are very much looking at solutions to this. Obviously, the hope is that over time, as liquidity continues to grow in the secondary market, that these gaps will close organically. We often see sometimes that these opportunities are what brings new investors to the marketplace. They see opportunities, they see potential to make money, and they come join the collectible community as a result of that. But we are working on something. I can't say more at this time, but we are looking to roll something out early next year, which I think will be a very interesting solution for this.
What about the considering the current asset owners the opportunity to vote to send an asset to public auction?
Yeah, it's something that we've done already, right? So we did this last year when we curated the Mint 25, which was a curated auction as part of the Mint Collective. We took 25 assets to auction. Some, I think 3 of them, if I'm not mistaken, 3 of them were assets that were on the platform. So we've done this before. There's precedence for it. And I do imagine if these gaps continue to remain, that we will look to be a little bit more aggressive in helping shareholders realize some of that liquidity.
All right. I was aware of the Mint 25, but I kind of didn't put 2 and 2 together that there is a precedent for that, and you guys have done that. So I like that, thinking outside the box and looking for opportunities for your members and investors. All right, next question is, how come the pace of IPOs have slowed over the past few months? Do you plan to ramp it back up? Any information you can share on that?
Yeah, I always think transparency is very important, right? I always probably go into oversharing as opposed to undersharing. So I'll give some context for it, right? And the reasoning behind that has been a couple fold. One is we've done everything through what's called Regulation A, which is a securities exemption here in the U.S., which allows us to essentially fractionalize assets for both accredited investors and unaccredited investors. When you offer assets to unaccredited investors, and that's defined very clearly by the SEC. This is not a collectible definition. This is an SEC definition, and it's primarily based on income and net worth. When you do that, there's pretty onerous regulations around bringing assets to the market, right? So, we have to essentially agree on a consignment, a deal with a consignor. We have to then file it for approval with the SEC. That process can take months. Right. And we have to pre-agree on a price, and there's not that much flexibility around, kind of price adjustments if the market either goes up or goes down. Right. And so, given the volatility we've seen in the collectibles market over the last couple of months, candidly, a lot of the offerings that we had qualified by the SEC were just not at values that we felt comfortable offering to our community. So we've been proactive in that for the most part. We have, and we are going to be making announcements for ways that we've identified to speed up the process. Our hope is that it creates a much better consignor experience. And if you create a better consignor experience, it allows us to bring better assets quicker and with better, sharper pricing to the community. So it's really been proactive. We've done this proactively, I should say, to just make sure that what we do offer, we feel good about. Obviously, people are not always going to agree on valuation. There's one thing I can tell you about the collectibles market is nobody agrees on a set price. And there oftentimes is not one set price. And oftentimes there's a lot of factors that go into a price, right? And so, our team does as good of a job as you possibly can to bring assets, in my opinion, to the market at fair prices. And if we don't feel that to be the case, then oftentimes we're just not going to run it.
Yeah, interesting stuff. And I appreciate the clarification, the transparency on that. And, I have a lot of respect for the people who do submit buyout offers to Collectible and other fractional ownership platforms for their assets, because oftentimes these assets are very, very scarce. They're often one of one type of items, or just, whether it's a game used piece of memorabilia or a very rare one of one card like a logo man. And for someone to come up and make an offer of $500,000 and up is it's a respectable method or just confidence that they have in the item as to what it might be worth. And then it's up to the seller or the unit holders to decide whether or not they are aligned on that. How is Collectible going about attracting new users to the platform, new investors?
Yeah, I mean, we've taken a pretty multi-pronged approach. For transparency, we really haven't spent that much to acquire our users so far, right? I think it's been we have over 100,000 signups on the platform, roughly 12, 13,000 active users. I don't have the exact number in front of me. It could be off by a little bit. And we spent probably 800 to 900 grand to acquire them thus far. We do fully anticipate those numbers expanding. We look forward to more aggressively investing in user growth. But I also think a lot of our user growth will come through distribution networks, come through strategic relationships, strategic partnerships. And we look forward to announcing some of those hopefully as soon as we possibly can.
All right. Yeah. Excited to see what comes with that. All right. Next question. Does Collectible plan to expand outside of just fractional ownership? We've seen Collectible establish itself in the live event space and the community space as well. Seems like there would be an opportunity to get into more traditional collector revenue streams as well.
Yeah, it's a great question. So, I wish people could see our roadmap that we put forth way back, even pre-Collectible. And our roadmap has always been, let's start with fractional. Let's establish a really strong position in fractional. Let's establish a really strong position within sports collectibles and then kind of expand from there. So yes, I would say without going into more detail, we do have plans to expand beyond just fractional ownership. We have a couple products and services that we are excited to roll out as community benefits more than anything, right? We're allowing our community to kind of leverage the relationships that we've built over the last couple of years to benefit them. And I think that's really exciting. One thing we see and obviously hear is that fractional is not for everyone in this hobby, and that's okay, right? When you look at our numbers, for the most part, fractional has really attracted a more investor audience. Actually, when you look at, our numbers, almost 85% of the dollars that have flown through Collectible so far have been accredited investors, right? And we think about accredited investors as a percentage of the total kind of collecting community. It's probably a fairly small percentage, right? And so we do think there's an opportunity to do right by the hobby, to give back to the hobby, and to provide real value add services and benefits to our community. So we do look forward to making some announcements in the pretty near future on that front.
So this question did talk about, live events and that. Let's go to the Mint Collective for a moment. The Mint Collective debuted in March of this year. Collectible in partnership with IMG and Peyton Manning's Omaha. I don't know the full
Productions.
name.
Yep.
Omaha Productions. I attended the event. I loved it. I thought it was excellent. Any updates or previews that you can share with us for the Mint Collective in 2023?
Yeah, I mean, so I know there's a bunch of announcements coming in the next couple of weeks, so I won't steal anyone's thunder there. But yeah, what I will say is that we are expanding the Mint Collective. I think the first year, when you're starting a new show, you never really know what to expect. You never really know what kind of life it's going to take on. We were very excited when the reception seemed pretty positive, and I think it became a pretty differentiated show within the hobby landscape. So, what I can say is that it's being expanded. So instead of being 3 days like it was last year, it'll be 4 days. And I think it'll have a little bit more of a, sort of a consumer presence if you'll take that. It's essentially more, it'll be split between kind of the investor alternative asset community and also lean a little bit more into, kind of a trade show type, which really appeals more to consumers. So more to come on this front. The dates are set in stone. So last couple of days in March, bleeding over into the first couple of days of April. It will be in Las Vegas. It will be at the same venue as it was last year at the MGM. And again, it'll be 4 days instead of 3 days. So more to come on this front, but we are excited to bring this back.
Let me ask you this about the Mint Collective, because one of the things I heard quite a bit about last year or earlier, the event from earlier this year, was that the panel discussions, these breakout sessions that happened in their own breakout conference rooms at the MGM, right close to the main event area, were happening kind of simultaneously with another breakout panel discussion or during the card show portion. So people couldn't really decide what to do. Have you guys, what's the strategy to handle sort of those issues that have been raised?
Yeah, great question. Yeah, you're spot on, right? And we heard that feedback from a lot of people that, hey, I did pick between going to this panel, this seminar, and learning, or kind of being on the trade floor, on the show floor. So we are going to break it up. I can't go into too many more details on that front, but the idea is to, by kind of expanding it one additional day, that you'll be able to separate kind of the learning part of it from the connecting part, from the transacting part. And so we are excited by that. I loved the panels last year. I thought they were engaging, and I thought people really took to them. I was on a couple panels, and I sat in many panels, and for the most part they were pretty full and they were pretty engaging. People were asking questions, and the panelists were enjoying it. I think a lot of people found value in it. So we are also looking closely at what types of panels, what types of topics we're going to be offering, and I think there's a real opportunity to continue to educate people on this market and to hear from great entrepreneurs, great companies, people who have a lot of influence, some who don't always have, the public following that a lot of people have. But I think there's a lot of value and a lot of smart people who have a lot of great things to say. And so, we're going to try to give them as much of a pulpit as we can.
Awesome. I look forward to it. I enjoyed those breakouts as well as the ones that I got to be on, and one of them that we were on together.
Yeah.
Continuing on the theme of live events, Collectible has been hosting networking dinners, events during events like the National in Atlantic City, the Beckett Industry Summit in Las Vegas a couple of weeks ago, where you guys are sponsoring, or with your partners, you're hosting these events and people are having dinner, drinks, that sort of thing. What's the strategy behind hosting these events that I must say your colleague Dave Marino does a wonderful job of promoting? And I don't know that there's a better host in the hobby that can work a room like he does, but the strategy behind that, what can you tell us about that?
Yeah, well, one, I share your sentiments on David. David, I think, has been a godsend to this industry, to this hobby. He has a real, kind of hospitality background, and so he's bringing that to the hobby, and I think it's amazing. The strategy is really nothing more than connectivity, right? We believe very strongly in community. We believe very strongly in sort of a rising tides mentality. We've always taken that position. We've been very consistent with that since the moment we launched, to if you grow the hobby, if you grow the industry, then we're pretty secure and pretty comfortable in Collectibles' place within it, right? And so, that has always been it, is to, to connect people, to connect companies, to really grow the pie together. That actually was the whole thesis behind the Mint Collect in the first place, was to grow the pie together. And so these are really just an extension off that. It's also just fun. I think, as much as I love these shows and, kind of being on the floor, and I enjoy that. I enjoy meeting people, talking to people. I think some of the best times of these shows are actually off hours, when people, you can really socialize with people. You can get to know people on a different level. You can sit down to dinner, break bread. And so, we're excited to continue doing that. And it's been great, the types of sponsorships and the relationships that Collectible has built during that. And, some of those relationships are going to be, part of community benefits that we're going to be able to offer, right? Through forging these relationships, these connections, there are opportunities for our community to really benefit off those too. So more to come on all of this. I know I'm being coy with some of this, but we have been working hard, and all this is part of a pretty holistic strategy that Collectible has taken since day one.
All right, let's talk about IPOs on the platform, the valuations of IPOs when they are announced and when they are open for people to purchase the shares of the items. I've seen people, like I take in a lot of social media, whether it's Instagram, Twitter, YouTube, Facebook, etc. And I've seen a lot of people, I won't say a lot, I've seen certain people say that, the fractional ownership platforms offer items at inflated value. Where do they get these amounts from? That's the kind of the sentiment. How do they come up with these numbers? They may argue that there aren't comps to support them. I don't know. I haven't researched them all. Yeah. But can you share some information with, I guess, number one, address that sentiment, and number two, provide us whatever you can, however much information you can, on how does Collectible come up with these market caps that the assets are offered, that the IPOs are offered under?
Yeah, no, great question again. I probably don't consume as much social media as you do. I try to, as much as I can, stay off social media, but obviously I see things, I hear things as well. And what I will say is, we always appreciate the feedback, even the criticism, right? I think that's great. It means we're relevant, and people are following us, and people are looking at what we're doing. I think the view that we're inflating assets is almost complementary to Collectible in a bizarre sense. I mean, the fact that we've done 250 assets total, right? 250 assets total, and the view is that Collectibles has that kind of impact on the market, I think just speaks to the power that people think Fractional has. I mean, obviously, our job in this is to try as best as we can within, regulatory confinements to bring, assets to the market at fair market prices, right? Think about what an investment bank does in the public markets, right? They bring companies to the market at fair market value based on those, that day's or that week's market conditions. Market conditions can change, right? But, they try to bring assets to the market at market conditions that they believe are fair at that time. There's a lot of assets that are quite easy to comp. I mean, one, I guess, comes to mind is the 1986 Fleer Michael Jordan, right? This trades pretty often, right? And you can look at Card Ladder and all that stuff for easy comparables. So those assets are easy to comp. Then there are other assets that are difficult to comp, right? Either they haven't sold in a long time, or they sold, but there's been catalysts since then, or maybe they came at auctions that were just not well followed. I mean, there's a whole host of things that go into pricing. We have a valuation team on Collectible. We work with some of the leading experts in the field to come up with prices. We then also have a valuation committee, right, on Collectible. So everything goes probably through 3 or 4 different checks and balances before even reaching the public. And some of those policies have been implemented over the last couple of months when the volatility has picked up, and the desire to offer sharp value is there. So again, I think this is one of those things where you cannot please everyone, right? There's always people who believe in evaluation, don't believe in evaluation. That's candidly one of the things I love about Fractional. When you think about the auction space, you think about some of these other marketplaces, all it takes for evaluation is one person, right? One person has to believe in evaluation for that to be the new comp, the new price, right? With Fractional, that's not the case, right? Fractional needs oftentimes hundreds of people to agree or support something at that number in order for that to be successfully fractionalized, right? So sometimes we bring assets to the market, and if people don't believe in it, it doesn't get funded, and that's okay, right? I think that's totally fine, right? This is a market of price discovery. This is a market of kind of seeing where the market is on some of these things. So we do the best job we can. You look at some of these auction estimates, sometimes they're wildly off. I was just doing a story recently about a vase. Here's a great example, right? A vase. They had various appraisers and auctioneers who gave it a $2,000 estimate at auction. I believe this was in Paris. Obviously an extreme example, but it illustrates the point. The auction house and the experts valued this at $2,000. The market, they valued it at $9 million, right? So sometimes there's wild discrepancies between what people think something's worth and what ultimately one person's willing to pay for it or the market's willing to pay for it. So again, all I can say is we do the best we can, certainly not perfect. And we are working on ways actually for Collectible to get out of the pricing game. And I think that's something that we would like to do as much as the regulations allow.
Yeah, I think that might be a nice thing for you and for others as well. Sounds like, especially just the fact that you want to get there. I think there's obviously a reason for that. There's a sentiment out there that fractionals. So when we say fractionals, I think really within the sports card memorabilia world, we're talking about Collectible. We're talking about Rally. Who else is out there that we're taught? There used to be Otis. I'm not sure if they're still around. That's who we're talking about with fractionals. And I think that there's a sentiment out there that believes that you guys, Collectible and others, are out there buying items, bidding on items at auction, whether, on whatever hobby auction site, and then offering them on your platform for sale. I ask this question because is it true? Do you guys ever put items on the platform that you have bought yourselves, or is it all consigned items?
Yeah, for the most part, it's consigned items. We have bought one or two pieces here and there, but the vast majority of items that wind up on Collectible are not purchased directly by Collectible. We work pretty much on a consignment basis. We work directly with consignors. Obviously, auction prices do factor into the valuation equation, right? If something just sold at auction or sold recently, or if there's an auction comp, it certainly informs the valuation that's brought to fractional investors. But we, for the most part, are not the ones buying items at auction and kind of dictating that price that way. Without saying more, we are working on a tool that we hope to release in the next couple of months, which will actually allow people to, again, not Collectible buying it, but our community will be able to pool resources together to buy items at auction. I think that's just a really cool application of fractional and getting people to be able to have exposure to items that they might not otherwise afford or might not otherwise want to be able to have that much exposure to it, but still giving them some exposure to it. So I think, just to answer your question, that's not Collectible's business model to date has not been to buy items and relist it. I think, look, again, I think all of the, I think the perception that fractional has that kind of power, I think, is almost flattering in a crazy way, right? The fact that, the belief is that, fractional ownership has that much impact on market pricing, given, how nascent we are, I think probably speaks to the confidence people have in the fractional space and the power of fractional space to, be a major player in all this.
So what is the thirst like out there for consignors to send you guys items for the fractional platform? Do you have a lot of demand from people who want to dispose of their items, or what I like about it is that you can dispose a portion of your item. You can retain equity, but that's besides the point. What's the demand from the hobby to consign items to Collectible?
It's strong. I mean, it's been strong since day one. Obviously, I think the ability for people to sell partial positions has been something that, has been a huge unlock for a lot of people. I mean, there are a lot of people who want partial liquidity, who don't want to lose full exposure to the item, still believe in the upside of these items. But, for a whole host of reasons, people, do want liquidity in this space. Oftentimes, this is a term we use often, but it's a liquidity starved environment. So you're seeing things like lending, the proliferation of lending obviously is one form of liquidity. Fractional is another form of liquidity on the equity side, just kind of different forms of liquidity. Our team gets a lot of inbounds and we take a very small percentage of it. We are looking for things that we think are kind of culturally and historically relevant, things that, and again, we curate for not just a quick flip, right? These are not quick flip instruments that we're curating. We're looking at things with a 3 to 5 year lens, right? So when people are looking at asset performance, I think that's an important thing for people to think about, right? We're not, necessarily curing things that we think are going to go up day one 40%. Although at times that has been the case. We've done 27 exits in almost a year's time with an average return above IPO of 60%. So not to say that it doesn't happen, but it's very, very hard to curate items with that kind of flip mentality in mind. Hard to do that consistently right over time. So we look at items that we believe will appreciate within a 3 to 5 year lens, and we take a very small percentage of that. We are, if there's any consignors who are out there listening to this, the regulatory, I don't want to sugarcoat it, the regulatory process to date has made consignments kind of clunky, right? There's a long lag time to kind of get assets approved by the SEC. And during that time, asset values can change. And so we have uncovered, I'm very excited to roll this out over the next couple weeks, couple months. We have uncovered a way where we can really reduce the lag time from consignment to IPO from what it is currently. Currently, it's probably a couple months, although we have no real visibility into that, which is one of the more frustrating parts about kind of doing Reg A fractional is we don't know, right? We don't know when the SEC is going to qualify it. They don't give you a lot of visibility. It's not a very communicative organization over at the SEC as much as we sort of wish that it were. So we have uncovered a way where we can bring items to the market within 1 week, right? So from 3 months to 1 week, which is a huge unlock. And it will create a much easier, more convenient, and frankly, better consigning experience. And for us, it allows us to price assets far easier, far better, right? We know that the price that we're going to agree today is what it's going to be, right? And I think overall, that's going to be just a much better experience for everybody. And we're very excited to make some announcements on that front shortly.
Excited to see what it is, what that hack was that you found to unlock that. That's really exciting. Contender Sports says, I love listening to these interviews because they remind me just how unintelligent I actually am. Good to see you, Contender, 2 days in a row. Fred says, isn't it a slippery slope if you are buying your own items and setting IPOs for them on Collectible afterwards? I thought you pretty much just said that you don't do that, but you did say you've done it a couple times. Do you want to address that?
Yeah. So again, Fred, it's not something we really do, right? Again, I don't have the exact numbers in front of me. I think we've probably done it on 1 or 2 occasions where we purchased an item that we really loved and we weren't able to get it any other way besides purchasing it at auction, some pretty rare items. So we really have not participated much in acquiring items. We really work directly with consignors, but I do want to make it very clear that auction results do factor into the valuations of items that we bring to the market. So it's not completely decoupled, but it's typically not Collectible being the one buying it and then relisting it higher.
All right, back to some of the content I consume, social media, Twitter, Instagram, those kinds of things. I've seen a couple of accounts post sentiments that fractional is just no good for the hobby. And one post I saw recently said that the 2 worst things to happen to the hobby, one this poster said was Instagram, or sorry, was fractional. I think the other they said was breaking. I don't recall 100%, but I certainly noticed when they said fractional. I guess 2 questions for you on that. And I see certain accounts on Twitter sort of attack the whole concept. Why do you think these people? What do you think they're seeing that you're not? Why do you think they have that sentiment? And what's your response to these sort of narratives that are trying to be created out there?
Yeah, one thing, by the way, we knew this when we got into this, right? The hobby, unfortunately, or fortunately, and I'm not sure, but fortunately, or unfortunately, I should say, has a checkered past, a checkered history of embracing new entrants, new upstarts, new concepts, new technologies, new ideas. This has been pretty consistent. I remember, hearing about this when grading was first, sort of brought to the market. People hated grading. People hated it, right? And they tried to smash it. And grading didn't really take off for a long time. A lot of people don't realize this, but PSA had some dark years, had some pretty quiet years. And now, obviously, grading, especially tag, Jeremy, I know you're involved in tag now. Grading, I don't think people could argue, grading has been one of the biggest advents to the market, has really allowed for, better pricing and standardization, and, has really led to a lot more transaction volume, probably safety and security across the industry. Obviously, breaking is another prominent example. When a lot of these breaking companies first launched, people slammed it. And now, you look at the numbers flowing through grading, and they're huge, right? And so, look, I mean, I have a healthy appreciation for skepticism, right? I mean, we hear the critics, we listen to the critics. The critics make us better. I mean, honestly, right? I appreciate them because they point out things that, by the way, we know, right? Like we know there are some challenges with the fractional model, and that's why we work tirelessly every day to try to create better experiences, right? And to price things better and to have, quicker, speed to the market and to find ways to kind of deliver shareholder value and other benefits to our community. So, I don't think our critics or our skeptics know anything we don't know. I think we probably feel and know things that they are pointing out well before they do. And, I would say, look, fractional is not for everyone. I mean, I want to make that very clear. We fully expect that there's going to be a decent amount of the hobby population who hates fractional just because it's not what they're accustomed to, right? And there's a lot of people who don't get the idea of having ownership of something they can't touch and feel and see. They don't think collectibles are alternative assets. They don't think these are financial instruments. And I get that, right? You're totally entitled to your opinion. We happen to have a slightly different opinion, but it's not to say they're right or we're wrong or we're right and they're wrong. Everyone's entitled to their own opinion, right? So what I can say is fractional is not for everyone. I appreciate the skeptics because it makes us build a better product and to kind of understand where the pain points are. And what I will say is that hopefully, with some of the new products and services we're rolling out, maybe we have something for these people who don't like fractional but want to kind of be part of the collectible community. So again, we hear everything, we see everything, and it really fuels us to build a better product. So thank you.
All right, good. I appreciate that. I had a question come up from my friend Stamatis, and it's really wondering what fractional is. I'm going to put it up there. I don't understand the whole question, but he says, is fractional ownership a stock share on that specific card? If so, how are people paying towards it, and who decides to pull their share? So I think really he's asking is how do you buy it and how do you sell it? And with you, I think this is good to answer for anybody who may not know what fractional really is. Can you also, Ezra, in your response to that, just speak to what do you see as the value proposition of fractional ownership via Collectible?
Yeah, I mean, I think there's various value propositions, just kind of depending if you're a buyer or a seller, or, for buyers, I mean, the biggest benefit is really exposure to own items that you would never otherwise be able to afford. I mean, we see all these record headlines and news articles about this $1 million sale and that $1 million sale and the high end of the industry, and they're great for publicity. But unfortunately, when you take a step back, very few people can really participate at that level, right? And so really what it allows is for people who want to own that Mantle 52 in a high grade, right? Or that Jordan 86 Fleer in a 10, or a Wilt Chamberlain full home uniform, these iconic pieces, right? Which otherwise they would have no opportunity to afford any other way or to own any other way. It really gives them a very easy on-ramp into ownership of it. So you own real, equity, you own real, kind of shares in that asset, and you participate in any economic, upside as a result of that ownership in it. The other thing is sometimes people just like fractional, even if they could afford it, they like it because it's just much easier, right? As opposed to buying an item and vaulting it and insuring it and selling it and all that stuff. You can just literally, with a couple clicks of your mouse or on your phone, right? You could have, you could be an owner of these things without any of the pain points. So often what we're seeing is oftentimes fractional is sort of that first on-ramp into new collectors or investors in collectibles, whatever you want to call them, to really, develop a love and an affinity for collectibles. I think that's, something that's pretty powerful. For sellers, it gives them the ability, I think the major thing sellers love about it is they can sell partial stakes in collectibles. So before, just take a step back, before Collectible introduced this concept, if you want to sell something, your options are sell all of it or sell none of it, right? You either had to make a decision, do you want to sell it and may never see it again? Or do you want to just not sell it at all, right? Now you can sell, a partial stake in an asset. You can sell 50%, 75%, 25%, right? It gives you liquidity without having to kind of forego any ownership of it. So I think those, I can go on and on and on about all the benefits, but I think those succinctly are the three benefits.
So in essence, when you are retaining equity and only disposing of 50% of the equity of the item, you're in essence only consigning 50% of the equity or 50% of the item to Collectible, and you retain 50% ownership as well. Just to clarify that. Another hurdle I hear from people is that, I want to hold my cards in hand. I don't want to just buy it and look at a stock or like a valuation report of what my holdings are worth. I want to hold these cards in hand, but at the same time, some of the same people are buying cards and vaulting them with the various vaulting services, whether it's PWCC or Golden or eBay. They're doing it that way as well. So I think it makes sense for a lot of people. Like you said, it's not going to be for everybody. I'm a lifelong collector. I love having my cards in hand. I'm not that interested in vaulting services. I see the benefit of them, especially for high value cards, because you deal with natural disasters, fires, floods, theft, etc. But if I was eligible to invest on Collectible, I'm not, because I'm Canadian. But if I was, and I don't have a social security number, but if I was, I'd have no problem investing on collectible items as a complement to what I'm already collecting and holding in hand, because I cannot afford a PSA 8 or 7 Mickey Mantle 52 Topps card.
Well, just on your last point about you not being able to participate as a result of you being Canadian, another exciting announcement that we have is we've cracked the code on international participation.
Oh, good. Okay.
So,
and I'm hearing that for the first time right now, so that's music to my ears.
We've been working hard on this for the last 2 years. Canada, unfortunately, I don't think will be our first market we're going to roll out, but we are anticipating being in the UK and Australia will probably be the first 2 markets we open up. We are anticipating being in those markets sometime early 2023. Canada is very much on the roadmap. Asia, in Asia Pacific, very much on the roadmap. So, when people talk about liquidity and kind of opening up, kind of doors to new countries and new participants, that's another key thing that we're doing, is we're opening up the ability for international collectors and investors to also participate on Collectible. And so we're very excited about that.
Good. Oh, I'm excited about that too. And so is this particular Facebook user right here. All right. Will Collectible expand outside of sports? Right now, you are exclusively sports cards and memorabilia. Will you expand outside of that?
So again, I wish people could see our roadmap from even pre-launch, right? So what we always contemplated was going to be the first 2 years of our operation, we're going to stick strictly to sports. And then starting in 2023, we're going to open the door to other verticals, like a lot of other marketplaces do. And so the short answer is we're very much on track with our roadmap. We do anticipate opening up some other verticals. How we do this, I think, will be innovative and exciting. We're also working on finalizing partnerships with some supply partners in various different categories. So we will be expanding beyond sports. Some of our content efforts have already been talking about things that are not just sports specific. So we're excited about that. And again, this has always been something that the roadmap has contemplated. 2023 was always our goal of expanding beyond sports. And I'm excited to say that we are smack on track.
Awesome. Well, I have 2 more questions here. Then I'm going to open it up to you for some announcements. Was what can be expected from Collectible to close out 2022? You've mentioned a bunch of things already. Is there anything else that you haven't mentioned that you'd like to announce or address?
Yeah, no, I mean, what I will say is that for the last couple of months have been, really kind of head down building. We've got a lot of things in the pipeline right now, a lot of new products and services we're excited to be rolling out. One thing I can say, publicly on the record is we are going to be doing a big event at Art Basel. For people who don't know what Art Basel is I would say, one of the leading activations and shows and events for high-end art collectors and high-end collectors of different stripes. It's in Miami. And so last year we threw one event and the feedback was terrific. So we're going to be throwing a whole host of events. I believe we're the first collectibles company outside of high-end art to have an exhibit directly on the beach of Miami during Art Basel. So really, really excited about this. I think one thing we've seen is the narrative of other types of collectibles, especially sports collectibles, being looked at in the same vein as fine art. We've seen this with game-worn memorabilia. We've seen this with Mickey Mantle cards, right? This has been part of the narrative. And so we're very excited to put sports collectibles and other types of collectibles on display at Art Basel for that narrative to really take shape. So more to come in terms of who our partners are in this event. But really, really excited to make that announcement that we will be doing something big at Art Basel, and a couple other announcements will be coming as part of that.
All right. And I think I'm just looking at, you did give me a preview on these announcements. I think that we've addressed all of those through right now, Art Basel, and just over the past 55 minutes. We have about 5 minutes left in our time slot. I have one more question from you, which is kind of a wrap-up question, but I do want to just address the chat, everybody watching. If you have any questions for Ezra, Now is the time, because we are at the end of our list. The question I'm about to ask him is a more general market type question. So if you have any more questions for him, get them in the chat right now. We will try to get to them. And with that, Ezra, my last question on my list is, what is your outlook on the market overall based on where we're at today?
Yeah, so are we talking about the card market?
Well, let's talk about sports. Hey, listen, I'm more interested in sports cards than memorabilia. I don't really collect memorabilia. So for me, I'm curious to hear about sports cards. Collectible, however, handles sports cards and sports memorabilia. So however you'd like to approach it.
Well, look, man, again, when we talk about the market, you have to segment it obviously in a lot of different ways, right? There's kind of the blue chip, kind of high end market. And then there's, kind of more of the collectors market, kind of the mid tier. I don't want to say lower tier, because people who collect lower tier, think those are prize jewels, and they are, right? They are, and might not be in value necessarily, but kind of your affinity for it certainly, meaningful. I mean, look, I think the market's in a pretty interesting spot, right? I mean, I think overall, not to say everything is done better than expected, but I would say, given the macro circumstances, given inflation, given where all the broader markets are, I'm pretty encouraged. I really am. I mean, when you look at, again, the high-end sports card market, obviously there has, been a little bit of a come down in price, but, the best of the best, right? The tentpole, beachfront properties, as we call them, have done extraordinarily well, right? We're seeing record prices in mantle cards. There were great results last weekend, I think, at Leland's on Willie Mays cards, right? So you're seeing vintage, kind of scarce assets really hold up, I think, exceptionally well. I saw something earlier, the Card Ladder 50 index for the last quarter, at a time where there's been a lot of, kind of macro turmoil. I think it's up 8%, if my numbers were correct. So, I mean, I think given that, I think the market's in a good spot. Obviously, there's the elephant in the room with Fanatics and what that's going to do, with some of the primary market. I think that's going to be very interesting. We had a meeting with Fanatics recently, and what I can say firsthand is, I think they care about the market. I think they want to bring a lot of exposure to the market. I think they want to bring a lot of marketing prowess to the market, and I think they are here to kind of help grow it, right, to a more mainstream audience. So overall, when it comes to sports cards, I do think there's been, with the exception of the high end vintage, there's been some softening. I think it's interesting to look at the correlations between some of the modern cards and things like cryptocurrencies. I think there's probably a little bit of liquidity unwind happening there. I think there's probably a little bit of leverage in the system that still needs to come out. I think it'll be interesting, kind of how things take shape in early next year as people start to get, 1099s and, have tax consequences and all. I think that'll be interesting. But, certainly I think for the most part, I'm pretty encouraged. When it comes to game-worn memorabilia, I mean, this has been something that I've been, not to say all my predictions are correct, because believe me, if you see my survivor picks, you know otherwise. But, I've said for a long time, we did not understand, why game-worn memorabilia was so mispriced relative to cards for a long time. I think you're starting to see, that gap close. We've seen record headlines in game-worn memorabilia. Knowing what I know coming down the pipeline, there's a couple big game-worn memorabilia assets that are going to be hitting the auction block over the next couple of months. So I think that narrative of game-worn memorabilia continuing to rise is one that I certainly believe in, not securities advice, but I certainly believe in game-worn memorabilia. And then I think some of these other, smaller verticals are interesting too. I mean, obviously, I think we've seen kind of the rise and fall of some subcategories. Tickets had a big run. Now they've come back to earth. But I think things like graded magazines are really interesting. There's a real strong collector base. There's IP. They're really beautiful to look at. So I believe in those markets as well. So look, overall, I think the market, given the macro environment, I'm pretty encouraged with what I'm seeing.
Awesome. Oh, well, I appreciate that. It's a lot of good insight there, and it's interesting to hear your views. You mentioned graded magazines. I do know we will have on a near future guest of Collectible Live will be somebody who's very active in the graded Sports Illustrated magazine world, and I'm looking forward to having that gentleman on the show and learning from him. We didn't have another question just came in. I'll get to it, but first, you know that I'm involved with tag grading, which is automated AI computerized grading of sports cards, and you're also the CEO of a platform that deals in graded sports cards quite often. I don't think you would ever have an item on your platform that is not graded. What are you I'm sort of self-serving here, but what are you hearing about automated grading, and how do you see it kind of rolling out over the future?
Yeah, I mean, look, I think obviously it's been a response to some of the backlog that we've seen over the last couple of years. I think every company, for the most part, is looking at ways to kind of speed the process up and to address those backlog concerns. I did see Tag firsthand at the industry summit, and I will say it was very impressive, right? And I think that the level of transparency is very important. I mean, one thing that we hear all the time, right, is why did this 9 sell for much higher or much lower? Why did this 10 sell for much higher or lower? Or excuse me, a 10 is not a 10, that's a 10, right? One 10 has much better eye appeal than another 10. So there's all these intricacies in the market. And I think the level of transparency that Tag provides does answer some of those questions around, well, why is one 10 worth more than another 10? So if nothing else, I very much appreciate the transparency. I mean, I think Collectible hopefully has done a lot for transparency in the space, and we continue to do a lot of things for transparency and regulation in the space. I also hope that, and I know that a lot of other grading companies are probably looking at similar things and providing more transparency and data to the market. So I think anytime you're seeing increases in transparency, increases in data and regulation, I think that's a good thing for the market overall. So I was impressed, and I think it's only good for the market.
All right. And Punt Pass Click says, are there any plans to showcase the assets to the public? For example, creating a curated exhibit that are ticketed events where the pooled profits get distributed to asset shareholders.
Yeah, great question there. So yes, I will say, I think this is one of the ways that Collectible can do better and do more, right? Is to do kind of fun, interactive community things like this. We have put assets on display before. We have our Babe Ruth asset is actually at the Babe Ruth Origin Museum in Baltimore. We're probably going to work on something with the Seattle Kraken, where we have a pretty cool offering of the first 6 jerseys the Kraken ever wore on the ice. Will hopefully be on display at the Kraken Arena. We did something recently with the Carlton Fisk ball. We put that on display at Fenway Park. So I do think things like that are great ideas, and ones that I think we're going to lean more into. Just kind of keeps falling off of our roadmap. We got a lot of other things to do, but I love the idea, and we'll certainly look to implement some of that going forward.
Right on. And Vintage Baseball Card Pack says, thanks for your time and sharing an update on what Collectible is doing. I definitely think we covered just about everything we could. Punt Pass Click says, very cool. I need reasons to get out of the house. There you go. All right. Well, I think we're going to wrap this up, Ezra. So with that, let me just make a couple of short announcements here. Collectible Live will be back this Sunday at 7 o'clock Eastern. Guest to be announced. Juggling a couple just with scheduling accommodations. The Sunday after, there will not be an episode, but we will do it on the Monday or Tuesday after the next Sunday. Maybe not Monday, because I believe that's the Halloween. So Tuesday, November the 1st, I believe, will be the episode after this coming Sundays. Also, I'll let everybody know, tonight on the Sports Cards Live YouTube channel, we will be covering the PWCC Premier Auction, as we do every month. And Saturday night on Sports Cards Live as well, we have an episode with the organizers of the Union Marketplace card show. So excited for all these episodes upcoming. Want to wish everybody a great night, a great next few days. Hope to see you tonight and Saturday on the channel, and of course Sunday on Collectible Live. Ezra, final words to you, and then we are going to sign off.
Yeah, no, and look, I think the final words are, look, all I can say is we have a great team. We work very hard. I think integrity is very important, especially sometimes in the collectible space. So you always get that from us. We're very open. We're very open to suggestions and feedback. And so please keep them coming. And we very much appreciate your support and look forward to rolling out some of the things we have in store.
Awesome. All right. And thank you, Fred, for that comment right there. That is going to end it, everybody. Thank you for joining us tonight, Ezra. Thank you so much for answering all the community's questions. And hang tight right there for a moment, Ezra. Everybody else, thank you again. This episode is over.